10 investments that are recession-proof. Welcome to our channel, the Enchanted Luxury Studio, where we talk about wealth and luxury. Nowadays, nothing else disrupts the market of various industries as drastic as global inflation. The current worldwide price hike has been making our life essential hard to afford, such as gas and groceries. As everything is becoming more and more expensive, the precautionary measures that come with this agitating economic picture cannot be overstated. Despite the fact that it may be harder to make a move with your finances amidst global inflation, it should not stop or prevent you from saving and investing. However, you might have some reviewing to do on your portfolio to see if you are positioned in the most recession-proof manner possible. Now, just to make it clear, no area of investment is completely excluded from an economic deterioration. Any industry can be affected as it can be unpredictable. However, there are some areas of investments that are traditionally more resilient during difficult economic times. And in this video, we are going to break down 10 of them. Here is the list of 10 investments that are recession-proof. Number 1. Pharmaceutical stocks. Being a subset of the healthcare industry, pharmaceutical stocks are traditionally considered defensive against recession along with other industries that provide basic everyday amenities. Health is a valuable aspect of human lives, and it is for this reason why medicine will always be in demand in the market. Economic crisis doesn't stop people from getting sick, and the demand for medication doesn't stop nor decline that easily. A patient with tuberculosis doesn't instantly heal when recession takes place. They still need to purchase medicines in order to survive no matter what the economical situation is. In some cases, people would even find a new way to make money just to pay for their medications. Taking these examples into consideration, it goes to show how pharmaceutical and other healthcare stocks can be a good play even when the economy is facing a downfall. Number 2. Companies with solid balance sheets. In times of recession, particularly a long and uncertain one, finding companies with the strongest balance sheets could be a great option for investments. As sales dry up and expenses continue, companies without large cash reserves or other assets to help them survive the storm are the most likely to suffer, with some folding up shop entirely and never coming back. To name a few examples, corporations like Google and Microsoft both have fortress-like balance sheet and will no doubt survive a recession. Number 3. Rental properties. Now, this is a tricky one, and you might probably be asking why rentals are included on this list when housing prices tend to go down during major economic traumas. It's true, housing as an investment isn't particularly recession-proof. However, it can be much more defensive than any other areas of investments because it provides passive income. To simply put, passive income pertains to the amount of earnings you accumulate from an independent source. When price hike arises in the real estate industry, many home buyers will step out of the market, but prospects for owners of rental properties could be especially good. As real estate investments are less likely to be totally recession-proof, caution is required particularly during the planning phase. Take it into account to make your property in demand by placing it in a well-located area. Before making any move, you have to first understand the work and risk involved in owning a rental property. The evaluation of whether or not you'll thrive during a recession is the most important step to be taken. Number 4. Technological stocks. Investing in technology is not always considered a classic defensive play in times of economic crisis. However, when COVID-19 took place in 2020, wherein total lockdowns were implemented globally, technological investment made a mark and was deemed more valuable than ever. We now live in an era where many people around the world are staying at home, and technology has proven to be an essential tool not only for recreational and work purposes, but also for linking us all together regardless of distances. With the rise of endless Zoom conferences, work from home jobs, FaceTime with family and friends, binge watching Netflix hits, and ordering items from virtual shops, it is sensible to say that investments in tech stocks could hold up quite well during a recession. As various businesses these days gradually shift to cyberspace, this trend is bound to continue in the long run. Number 5. Waste disposal companies. Waste is a natural byproduct of human existence. While the production of garbage and other hazardous scraps remains to be an ongoing debate among environmental advocates, politicians, and capitalists, it doesn't make waste disposal less defensive to economic recession. Waste disposal companies are typically considered defensive because no matter the state of the economy at large, humans both generate trash and don't want it around. Weekly trash pickups typically continue across the nation no matter what the economic backdrop, and this makes waste disposal a good bet during a recession. Go ahead and get your favorite beverage and popcorn, subscribe to our channel, and turn on notifications. Number 6. Commodities. Commodities are raw materials such as metals, iron, and grains that can be used singly or as elements to create other products. Having the ability to live up to the price hike during inflation, commodities have long been considered as a potential hedge against recession. There are a few ways to invest in commodities. The easiest and perhaps one of the safest ways is through a mutual fund that invests in commodity-affiliated businesses such as mining, energy, or agricultural companies. Number 7. Precious metals. During stock market sell-offs and whenever an economy is in the overall state of reflux, precious metals such as gold, platinum, and silver remain in demand. Having been considered as rare elements, precious metals have a high economic value. Not only are they basic fundamentals in industrial production, but they are also regarded as a hedge against currency inflation. Throughout history, precious metals are seen as a store of value, something tangible that investors can physically hold on to while their intangible assets like stocks decline in value. Needless to say that the most popular precious metal in the market is gold, which price tends to rise during low interest rate environments. With gold paying no dividends, it becomes more attractive when other instruments are not paying much income either. Number 8. Grocery stores. It can be really tricky and difficult to invest in grocery stores because of their thin margin. However, in the recent economic recession brought by the COVID-19 pandemic, it was seen that grocery stores tend to have an uptick in sales and profitability. As consumers minimize their spending on eating out at restaurants, they tend to buy more groceries and eat at home. Food is among the most essential needs of our body. Even with a major fallback in the economy, people still need to eat, and nothing else provides a complete package of necessities for food as better and as affordable as grocery stores. Number 9. Diversification. When recession hits, one of the best investments you can make is something that is not traded on any exchange or unpurchasable from any company. It is a method called diversification. Diversification is the process of allocating different sections of your portfolio to non-correlated investments. When your portfolio is properly diversified, it becomes less likely for you to experience an up and down swing in value. In order for your investment journey to smoothen out, a perpendicular relationship should be acquired. When a portion of your investment goes down, another portion must be going up, as excessive portfolio volatility often leads to bad investment decisions such as selling everything at the bottom. With diversification of assets, you are able to ensure a different stream of income until the inevitable recovery after the recession. Number 10. Educational courses. When demotion transpires in the economy, investing in yourself becomes your best option at times. Make it a priority to learn a new set of skills, may it be through joining new career-oriented programs or enrolling in free online courses that dwell on your field of interest, or simply getting yourself some materials to venture in like self-help business books, Sometimes, taking these initial steps of acquiring knowledge would make you more prepared for an economic crisis than having to worry about where stocks, bonds, or gold are trading. Broadening your skill set will help you stand out and become more attractive to companies that require top-notch workers who are likely to help the business overcome an existing or incoming recession. There you have it, 10 investments that are recession-proof. Do you know any recession-proof investments that we haven't mentioned on the list? Let us know in the comments. If you like this video, don't forget to leave a thumbs up and subscribe to our channel for more awesome content like this. Thanks for watching!